Hello and welcome to the Weekend Investing Daily Bytes for 24th of September. So another day and the markets continue to go on. Uh, Disbelief in many corners of the market, but uh, nearly 26,000 on the Nifty clock. Derivative disaster limits reached is the discussion for the day. SEBI has come out with a new report on derivatives and how people are performing. We'll discuss that. First, please subscribe to the channel. Markets exactly where they were yesterday at close, Nifty 0.01% up, but giving back on some ground, gone to a high of 26,011, and it's about 70 points given from there. The last three sessions now, market is up more than 500 points, and hence there is tentativeness in terms of moving further. Nifty Next 50 Junior also moving up 0.13%, so flattish. And to that, mid caps opened gap up and stayed there about 0.31% on mid caps, and small caps giving up some of the ground made earlier in the day, minus 0.21%. No real problems anywhere in the markets. Just normal correction after a steep rise. And just look at how Bank Nifty has risen in the last 7, 8 sessions. And the give back is only 40% is real. In terms of momentum trends, it was fairly almost even 270 to 224. So declines slightly outpacing advance, and after 2 sessions that is expected. FII and DII numbers for the 23rd are also positive, both of them. So FII is mild positive and DII is good 1,000 crores cash there. Heat maps mildly red. So yes, companies slightly down, some banks were down. You had Reliance down a bit. Devers was down 2.5%. Ultra Semco was down 1.5%. Grasim and mild gains in some of the power stocks. Adani Green, Tata Power, some of the leaders there, Vedanta, DMart, PEL, DLF, these were the sort of gainers. PSU banks, which were running hard yesterday, gave up some ground, some consolidation there. And the public sector enterprise stocks also giving up some of the gains. Sectoral trends, metals, the only standing sector out there. This is on the back of Chinese stimulus being announced. About 0.5% rate cut is getting announced. Some big swaps for the real estate industry are getting announced in China. That has fueled metal rally across the Chinese markets. Public sector enterprise stocks also up 1% today. Commodities up 0.9%, energy 0.8%, IT 0.7%, and the rest were quite flat. FMCG and PSU banks, which were gaining yesterday, lost some ground. Not very trending day for most sectors, but metals, just look at the chart, going absolutely great guns today, 3% led by Nalco, Tata Steel, Welspun, NMDC, and Vedanta, APL Tube in copper and zinc. Stock spotlight, you can see AstraZeneca up a beautiful 16.7% today. So some small pockets of pharma have performed really well in the recent past. And even this stock was in April, May was nearly 5,000 rupees and now almost near 8,000 already. We see the long-term chart has remarkably performed in the last 10 years, going from nearly 600 rupees to 8,000. So some of these charts actually tell you how gradually some stocks can rise without being in focus. Story of the day, derivative disaster limits reached. So SEBI has come out with a report and total losses of 1.8 trillion rupees in 2 years by individual traders, 750 billion rupees in FY24 net losses. Only 7% of individual F&O traders were profitable over a 3-year period. Only 1% traders earned more than 1 lakh on it. This is, it's a very, I would say, low probability game of winning, where just 1% of the traders have earned more than 1 lakh, and 75% of loss makers continue to trade despite consecutive losses over 3 years. So it is also addictive to the extent that even if you're in losses, you don't give up. In terms of the index option volumes, it has increased 13 folds in FY24. Uh, no wonder why the focus is there on the options many. The FPIs and proprietary trades have profited significantly. So it looks like individual traders are losing and institutional traders are winning. 43% of traders are under 30, up from 31%. So more and more young folks are jumping into trading, maybe lured by the easy money influencers. Uh, 93% of young traders are taking losses, and over 75% of traders had annual income below 5, which is, your annual income is below 5 lakhs and if you're trading in economic markets, it is really good. Distribution of profit and losses during the FY 22 to 24. You can see here that on the left chart, see the number of traders in F&O. 101 traders made more than 10 crores. 2,400 traders more than 1 crore. 26,000 traders made a profit of 10 lakhs or more, and 96,000 of 1 lakh to 10. So if you combine this, it's about 1 lakh, maybe 30,000, somewhere near that figure, 1 lakh 25, 1 lakh 30,000 people in an entire country who have made 1 lakh or more profit uh, during 3 years. It is not such a great number for a country like ours. For 1 lakh people to make profit of 1 lakh and more in 3 years is very low. And losses are among us. I mean, losses of 23 lakh people have lost 1 lakh to 10 lakhs. 3.9 lakh people have lost 10 lakhs to 1 crore. 10,000 people have lost 1 crore to 10 crore. And 127 people have lost more than 10 crores. There may be some cases of arbitrage, traders also here, which may be included and maybe still the in terms of net profits and losses, you can see here very small percentage of players have had any profits, and most of them are concentrated in the loss for in terms of the amount of participation in age. I've already discussed. Young people are getting sucked in. You can see from 31% to 43% is the young population that getting sucked into ethanol, and the older folks, 6% has gone to 4%, 18 has gone to 14 in 40 to 50, and 30 to 40-year-olds, 42 has got 55. I think this is a good trend that is happening here, but this is, of course, a bit worrisome to say. Okay. So increase the contract value from 5 to 10 lakhs is the measures from SEBI. 15 lakhs, then 20 to 30 lakhs after 6 months. If the contracts value go to 20 to 30 lakhs, you can imagine where the 5 lakh per year income folks will go. Upfront margins to be raised on sellers, cut the number of weekly expiries to one from current 5 per exchange. That is the measure. So it all the measures are towards curbing this attractiveness of the ethno segment, increasing the price intervals of out of the money strike. So, it won't be easy for traders to have the sort of covered strategies, given that the strikes will be far out. Uh, Margin benefits for calendar spreads to be eliminated. That will also increase the margins for different strategies. Implementing real-time monitoring of position limits to prevent excessive trading. I think this is already in place. Brokers to collect margins from option buyers at the beginning of trading day. I think that was also already in place in terms of measures. So all this is pointing towards uh, sort of reduced economic activity in the coming years. Right now, the impact is not there because most of these measures will get kicked in soon. And once the lot sizes and the margins go up, I think that will most likely have curbing impact on the volumes and the liquidity, and that overall may not help the market sentiments. What could happen, however, is that all these folks may try to then come into the cash segment and go for intraday trading versus the F&O where margins may be more in control. And, maybe that shift from F&O towards cash market may happen, in which case the liquidity in the cash market may improve, and that is not such a bad. So overall, the youth of the country getting trapped in F&O is not such a good thing. But I mean, who am I to say? Uh, People who are willing to risk their money and their time and are trying to make a living or a profit out of this is fair enough. And I just hope that most people who are doing this be able to make profits in 1 to 3 years and not just 1%, because that number is extremely low. I mean, you do any business, you have much higher probability of success than 1%. So this is something that is a bit of a turn off for people who look towards this industry for a career. But as they say, things which look simple are not easy. Thanks.